America goes for funding. Your direct nationwide lender. We do our live show talk with Angelo every week. So I appreciate all of you guys tuning in and watching the channel tonight. Our show is about DSCR loans, debt service coverage ratio, an investor special that we're going to be having tonight, talking about what are DSCR loans, what are the best loans for investors, what makes more sense. Should you do a conventional loan, a bridge loan, a fix and flip? So we're going to break down a debt service coverage ratio. This is a very, very popular loan program right now that's basically taking America by storm. Most of the conventional loan products are kind of dying, going away, and a lot of people are going to DSCR loans because they're a lot easier to get and they have low interest rates, and the qualifications are much simpler than conventional loans, and you can close in your LLC. So if you want to learn more about DSCR loans and what they are, that's what we're going to be talking about tonight. We'll have a full breakdown to explain exactly what it is. So those of you guys don't know who we are a direct nationwide commercial, residential, and hey Kevin, what's up buddy? A direct commercial, residential, and a private lender. We've been doing it now for over 20 years. Commercial loans, residential, private lending, hard money loans, bridge loans, no documentation. And so I started doing this when I was 22 years old, 44 today. So 22 years going strong, actively lending. You can look us up online, see all the good, positive, happy reviews. We're here to help you. We work with brokers, we work with realtors, directly with consumers. So, and we cater to a lot of self-employed. We deal with a lot of home buyers, FHA, VA, USDA, conventional lending, and a ton of investors and business owners. So right now we're going to be talking about investor loans, people that are trying to grow their mailbox money, grow passive income, make more money with real estate. And for the longest time, people had to resort to going to the banks to get conventional lending, to get their financing. And one of the things that's happened in the last 10 years is private lenders have created non-QM, the non-qualified mortgage, and the DSCR loan to compete with conventional. Because conventional loans, they take too long. It's extremely invasive underwriting. It can take up to 2 months to process and close a loan. The conditions, the requirements to get that type of loan closed is immense. And when you're trying to buy real estate, you don't have time. You don't have 2 or 3 weeks to get it waited on an offer or to get a pre-approval. You have to move fast. So private lending is designed for people that were speed to capital, fast closing, fair terms. There's also investor protection, closing your LLC, and there's a more dynamic and robust setup for real estate investors. For example, with conventional loans, you have a limit of 10 properties that you can have, and with investor DSCR loans, think of it as a commercial loan. There is no limit on the amount of properties that you can have. You can have 1 property, or you can have 1,000 properties. Okay, you can even have a blanket property where you have multiple properties under one loan. Like I have one customer that has 32 rental properties, and it's on one blanket loan. He has 1 mortgage payment. So the other thing is that you get to close in your LLC. You don't have to close in your personal name. So you have that investor protection, that shield, in case something happens, that you close on your LLC. It doesn't affect your credit personally. With conventional loans, you cannot close an LLC. You have to close in your personal name. And with a conventional loan, it requires that you have employment, income, and your own financials are underwritten with your personal debt to income ratio. So the big thing with the debt service coverage ratio loan, you don't even have to have a job. You don't have to have employment. It's just purely underwritten on the cash flow of the property. So if the property is making $2,000 a month, then your payment has to be less than or equal to $2,000 a month if you want maximum financing. So that's the biggest difference with debt service coverage ratio, is you're underwriting the property's underlying asset to qualify, not your personal financial situation. Okay? So, and plus here's the thing, you're not going to want to buy a property if it's not cash flowing 1-to-1. What do I mean by that? So if you're going to buy a rental property, you normally have to put at least 10 to 20% down. Now after that, If the payment's costing you $2,000 a month for principal, interest, taxes, and insurance, you want to be collecting at least $2,000 a month or more, so that's 1-to-1 against the PITI, because you don't want to have negative cash flow unless you have a plan for something to do with it. If it's just a long-term rental, then you want your rents coming in to be $2,000 a month or higher. Does that make sense? So that's the difference with the debt service. Hey, how are you? Thank you so much for Servette. Thank you so much for watching the show and the channel. So that's one of the biggest differences, is that you're looking for the payment to be less than or equal to the rents. So now there are situations where you can do value add, where the payment is going to be more than the rent for a short period of time. If you're adding more square footage, more doors, and the long-term plan is to increase value, and that's a whole completely different episode, different loan products where you do bridge loans, fix and flip, fix to rent. We can talk about that a little bit today, but the big focus point today is about debt service coverage ratio, and how these loans are basically taking America by storm. Millions of investors are going to this product because it just makes a lot more sense. Now, those are all the good things about debt service coverage, DSCR loans. Some of the trade-offs, or I guess you can say the cons is that you are going to pay a little bit more interest. You're going to pay a little bit more fees for this loan, okay? And that's why we're letting you know up front what the trade-offs are, okay? So if a conventional rate is 6.5%, for example, right now, then a debt service coverage ratio loan could be about 7% or 0.5% more of interest, depending on who you work with. And the fees are probably going to be about 15% more on the fees. So if the closing costs are $5,000 for a conventional loan, you're probably going to be about $5,800 to $6,000 for a DSCR loan. It is a little bit more expensive to close in an entity, and the processing fees are a little bit more expensive. But everything in life is a trade-off and risk to reward, whether you decide to do conventional or DSCR. You have to weigh the pros and the cons, okay? So in my opinion, and because we offer conventional loans too, so I'm not trying to push anybody to do one thing over the other. I look at it logically and what makes the most sense, okay? So my opinion is, yes, of course, DSCR loans are the no-brainer, they're the winner, because you have way more advantages and way less cons with DSCR loans versus conventional. You know, like I said, you can have unlimited properties, you can bundle the properties, you can close your LLC. They don't underwrite your personal income. It could be asset-based, it could be credit-based. So there's so many good things about debt service coverage ratio loans. We offer them nationwide too, by the way. So it doesn't matter what state you're trying to buy these in, and you do not have to be in the state where you live to buy a rental property. So if you live in California, you can buy a rental property in Texas. There's nothing wrong with that. All right. So those are some of the advantages and some of the drawbacks between the debt service coverage ratio loan. As far as let's talk about some of the requirements and some of the terms of the loan. So for these loans, you can close in your personal name or you can close in an LLC. You have the option. Okay. They do like to see that you're a experienced investor, that you've closed on, or you own or operate or manage at least one rental property before. This product is not really designed for first-time investors. They do have that, but you have to increase your down payment, okay, from 20% or 25% down if you've never done this before. So it's good for people that have experience managing properties or have done deals before in the past. The other thing is that they like to see that you have at least 3 to 6 months of reserves in the bank, that you have some liquidity to make the payments. So if you have no money, it's not going to be a good loan for you, okay? So the other thing is credit. Credit does matter. The higher credit score, you get a lower interest rate, you get more leverage and better terms. So if you have 720 or higher credit, or even 800 or higher credit, you have way more options and access to better financing versus if you have a 550 credit score. All right, so we have asset-based loans with no credit score requirement at all, but you're gonna have to put more money down. It's gonna be a higher interest rate. So we have no problem to do that. It's okay. We don't care if you're okay with it, but If you got a 500 credit score versus an 800, it's going to be a big difference on the down payment or the reserves and the interest rate. Kind of give you an example. If you have an 800 credit score and you're an experienced investor, we have programs starting with as little as 10% down, and we'll give you 90%, and you can get 30-year fixed loans as low as 6.5% interest. And you can do interest only on DSCR loans. You can do interest only for up to 10 years with DSCR loans. With conventional, you cannot do that. Now, if you had a 550 credit score, you may have to put 30% down and pay 11 or 12% interest. So that's the big difference, okay? And we cater to all credit scores, so it doesn't matter to us where your score's at. Like I said, we're agnostic to that. And also what we do a lot of the times is we give you a bridge loan to help you to boost up your credit score. And then that way it'll take you to at least get the property. You can own the property with a bridge and then move it to a DSCR loan after. If there's something wrong with the property, needs repairs, TLC, or your credit's not ready, we can do a bridge loan with no prepayment penalty and then move you over to long-term financing after. That's another strategy that we can do to help you. And if you guys have any questions about bridge loans, let me know, and DSCR. DSCR single family is 1 to 4 units, obviously. And then DSCR multifamily is 5 units above. You can do this on commercial multifamily, or you can do it on 1 to 4 family for single family residential. Another thing that I really like too, if you are closing in an LLC, there could be multiple owners of the LLC. So what you can do is, have one person with a higher credit score be the signer of the LLC. So for example, let's say the LLC has 2 owners and one person has an 800 credit score and then one person has a 500 credit score. You can make the person that has the higher 800 credit score as the signer to get better terms. We see this a lot too. The interest only feature I really like a lot because, okay, give me an example. Let's say you're buying a $500,000 rental property and the going rate is 6.9 for a 30-year fixed and the payment's $2,000 a month for principal and interest. The payment on an interest only is about 17% cheaper. And a lot of investors prefer to do interest only because they have a higher NOI. Because if the payment on principal and interest is $2,000 and you can get down to a $1,600 payment on interest only for 10 years, you're gonna have $400 more a month of cash flow coming in. And that cash flow is very, very important. You're not really so much trying to focus on making as much profit on the rental. It's about the equity appreciation as well on the real estate. If you bought that property for $300,000 in 10 years, it'll double to $600,000. Now you have all that extra equity. So keep that in mind. If you guys have any questions or comments down below, like I said, feel free to hit me up if you need anything. We do lend nationwide with our DSCR loans. You can call or text my office, 832-431-6331. We are open 7 days a week too, by the way. We have offices in California and San Diego, Chicago, Florida, Miami, Texas. So please don't be a stranger. Reach out to us if we can help you. We lend everywhere from Hawaii to Alaska to New York to Florida, all the tips of America. But I hope that you guys like my presentation on DSCR. It's one of my favorite loan programs. I'm very passionate about non-QM and the future of the non-qualified mortgage, and think that it'll take over the world of lending, and it has. It is doing it. In the last 10 years, it's grown by 383% market growth for non-QM loans in the last 10 years. It's unbelievable, and we're very happy to be a part of it. We play an instrumental role in giving you the content and offering the products to be able to deliver this to you. So, and if you want more information on becoming a loan partner with us, remember you can get paid for your referrals. Send us an email to loans@officialangelochristian.com to sign up to become an approved loan partner with Angelo Christian. Or if you want to join our real estate university, check the links down below. If you want to become a top producer, a top closer, even join my team with our real estate university school. It's our school built for you guys to help you, to educate you, get you the power of the content. Or if you want to get signed up to get pre-approved with us, there's also a link down below. There's no cost, there's no contract, there's no hard credit check, so it doesn't affect your points. And you'll get to work with me and my team to help you to get funding. So we have all these different options to be able to help you guys out there. And don't forget, we have our Google Angelo Christian Mortgage. If we've worked with you as a vendor or a partner and we've done business before, or you're a customer or whatever you've done, if you leave us a 5-star review on Google, send me an email to loans@officialangelochristian.com with the review that you did, and then we'll give you a free Amazon gift card. So please don't forget about that. And obviously, we appreciate all of your help and your support. If you know anyone that would benefit from watching the content, please share this information with them, forward it to them. Don't forget to subscribe, enable notifications, like that bell, give us a big thumbs up. Push this content out to anyone that you think that will add value and get value from it. We work incredibly hard to educate you guys, to empower you, get you the information. Remember, we're here for you. And don't forget, lastly, to all you mothers out there, tomorrow is Mother's Day. Happy Mother's Day to all of the hardworking mothers out there in the world. Wherever you are, we appreciate you. We wouldn't be here without our mother. And that's a very, very important thing. So thank you guys so much for tuning in and watching the channel today. We'll be back again next week after Mother's Day. This was a special episode on DSCR Loans. If we can help you with funding, don't forget to reach out to Angelo Christian to learn more about all the products that we offer and what we can do to help you to add value. So have a great weekend with your family. Happy Mother's Day. We'll see y'all again next week. Take care and peace out. Bye-bye.